Hi, my name is Ronald Ghosh, and it's my pleasure to host the latest episode of Fintech Founders. Our guest speaker today, Oliver Hughes, is going to run us through his amazing journey of building one of the world's most successful neobanks and most profitable fintechs. Oliver, thank you so much for joining us.
Hi, Ronnie. Thanks for having me.
Tell us a little bit about yourself. When I met you a few years back, you're running a bank called Tinkoff. I'd love to hear your journey to joining Tinkoff. But before we do that, for the few people who are listening to this who don't know what Tinkoff Bank is, tell the audience the origin story of Tinkoff Bank. What is Tinkoff Bank? Who was Oleg Tinkoff? Why did he set up a bank?
Sure. So thanks for the opportunity to be here. I'm not a founder, it's very important. I'm a manager. Yeah, so I was very fortunately for me hired by Oleg Tinkoff very early on in the project. So basically in the first few months to be the CEO of Tinkoff Bank and what became Tinkoff Group for basically the last 15 years of my life. So Oleg Tinkoff is Russia's answer to Richard Branson. He's an amazing entrepreneur who actually had quite a few different consumer-facing businesses. So he did something in frozen food. He had a brewery, a restaurant chain, electronics. Built up some capital, and he likes building businesses. And then decided that he wanted to get into financial services. He's just an amazing entrepreneur. But he was living in the US, and he was getting direct mail, so unsolicited offers, which sometimes rather uncharitably called junk mail. I happen to think they're very, very useful bits of mail, but anyway. And he was getting offers for credit cards and various other financial services. And he thought, I wonder if this could work in Russia. Back in early 2000, 2001, 2002, that kind of area, that kind of time frame, there really wasn't any retail in Russia. So there were payroll projects or salary programs, as they're called in Russia, and many other places, but no kind of retail financial services per se. And there was no direct consumer at all. So Oleg thought maybe that'd be a good idea. So he went about putting a team together. I was one of the early joiners, I was head of Visa at the time. And I was pitching against MasterCard for his business because it was a cards monoline, credit cards. And after our meeting, which is rather fraught, as they often are with Oleg, he rang me up and said, do you want to come and be the head of the business? So I did. So basically we started as a credit card monoline, but fortunately for us with a banking license from day one, and then built it through various stages, which I suspect we'll be discussing today, into basically what became a fully fledged financial services player, a digital bank, which catered to all segments, absolutely all segments. SME, corporate to a certain extent when I left, and that's growing. Retail, brokerage, you name it, payments on the merchant side. One of the most profitable banks in the world. I think if you look at fintechs, it was the second most profitable after PayPal. So back in 2021, which is the last available numbers, it made $840 million of net profit, and certainly one of the biggest. So it is right now, according to the latest numbers, got around 30 million customers. So it's one of the biggest digital banks in the world. And it was an absolute ball putting this together, but a long slog.
When Oleg set this up, so he's in the US, he's watching Capital One and others grow in the consumer space in the US. And why do you think this is going to work in Russia? Like, was there like this missing gap in the market? And what kind of business experience had he had before in Russia that made him think, hey, I can build a consumer-facing bank?
So Oleg's an entrepreneur and a very, very good one with amazing intuition, vision, drive. And he got together a bunch of people, very few of whom were bankers, fortunately, because I don't think bankers build very good banks. And I don't apologize for making that statement. who came from a variety of different backgrounds, but mainly were Russian mathematicians and physicists and engineers, who built a very different platform, different ideology behind providing financial services. So this was branchless, which enabled us to reach everywhere in Russia. So one of the problems back in 2007 when we launched Tinkoff was that you're reliant on your geographical footprint, on your branch network. That's the old traditional banking model, which still holds sway today to a large degree. We didn't have any branches, and we never opened any. We never intended to. No, Tinkoff never does now without me, because it means you can go literally everywhere, to any town, village, individual cottage in the middle of nowhere. That was one of the first ideas. The second idea was that you would have very strong focus on execution in one product category, which would drive a wedge into the market and be your platform or entry point to build something bigger. Very strong entrepreneurial approach, so risk-taking, but calculated risk, and high growth. So all of these things, lots of other things as well, but these kind of like essential ingredients went together to indicate that, we had a good chance of success. Although we did launch in 2007, 2008, just as a global financial crisis was happening, which, as you can imagine, being a credit card startup in Russia was not an easy ride.
The previous experience Oleg Tinkoff had was in businesses completely different to financial services, right? And what do you think he could carry over? So he's he's obviously a natural born entrepreneur, as you said, an instinctive entrepreneur. What are the sort of the lessons or learnings you could carry over? And then you made I never was a throwaway point, but I think I've heard you say it before. And I've heard other people say it before as well. Or maybe it was just you. When you're building a bank, you don't want bankers. Unpack that for the audience a little bit more. I think I know what you mean, but I'd love to hear you sort of unpack that a bit more. You want to build a bank, you don't want bankers.
Sure. So there's kind of three parts to your question. Yeah. The first is Oleg. The second was what did this startup founding team, if you like, of managers bring to and then the third was why there were a few bankers and why that was good. So the first thing was Oleg is an amazing guy in terms of building business, understanding market, consumer needs, understanding branding, a very strong marketing and growth, and just kind of inculcating this entrepreneurial approach. So it's an amazing experience learning of working with him for so long, so closely. So that's what basically carried over from his previous businesses. Yeah, but all of them were consumer facing. In terms of the managers, so he had a bunch of guys with a certain collective expertise in what used to be called IT, now it's called tech, in consumer finance to a certain extent, some marketing, direct mail or direct marketing, the D2C approach, which was a play that we used, from a variety of different areas. But from day one, there was a very strong analytical product-driven approach, which was totally non-banking. So that kind of segues into the third part of the question, is why I believe bankers don't design very good banks, or certainly not your new age type banks, your new economy bank, which don't have to be online, but we were. And that's because they have a particular mindset, they have a particular view of the customer. I'll footnote this by saying it's a horrible overgeneralization, oversimplification. Bankers are changing. There's some great bankers, and all the other make it goes. I don't want to be horrible to people for no good reason. But in general, back in 2007, our firm conviction was that we didn't want to hire bankers because bankers will build a bank. We didn't want to build a bank. We wanted to build something very different, which had total focus on strong marketing execution, marketing meaning direct to consumer customer acquisition through direct channels with no branch infrastructure, which meant that your servicing model had to be completely different because you can't send a customer to a branch. So here I am in UAE. I've been here for a year, fantastic place to be. And I'm very grateful for being welcomed here. But the banking experience is, for me, a little bit difficult because I haven't been in a branch for 15, 16 years. Here, the default is send me to a branch every couple of weeks. So that's part of the kind of mentality of a banker, stereotypically. And the other part is, you know, compliance and regulation, and you can't do that because we were never allowed to say, you know, we never let ourselves say, you can't do that. It was, okay, how can you do it? How do we find an innovative approach, a solution which allows us to do it without obviously breaking laws, regulation, or anything to the customer?
Now, you had spent many years in Visa and financial services. Tell us a little bit about your pre-Tinkoff background in finance and walk us through the motivation, the rationale to join this new bank, this new startup, this new type of bank. Why? I mean, sounds like a good gig, you know, being in Visa.
Yeah, I mean, so we've got to mentally cast our minds back to 2007. So there was no fintech. The word fintech was coined when was it coined? 2016, I suppose, when it really became common currency in terms of language. So now tech/fintech is kind of like, you know, it's a dotted line, and people use it to mean something pretty cool. In those days, when I left corporate Visa, which arguably is the original fintech, but anyway, let's leave that aside for a second. Everybody told me I was mad, that I completely lost the plot. What was I doing? Where was I doing? Had I really thought about this?
Yes.
So I was in Visa for almost 10 years. 2.5, 3 years of that was in London on the technology side, looking after the authorization system for VisaNet in the Samir region. So I used to come to Dubai as well. And then in 2000, Visa Samir decided to open an office in Moscow, built up his business basically from scratch. And I was the team sent out there to do that. I was a Russian speaker because I lived in the Soviet Union, did a Russian degree amongst other things, and spent the next 7 years or so in Russia building the business of Visa. So by the time I left, it was, I think it was on the cusp of going into the top 10 markets for Visa globally. So it became a very, very big show. And then, as I say, I met Oleg. I'm very fortunate, and he invited me to move over. So I didn't have to think long. Literally, I think I thought a day and said yes, thereabouts. And the reason for that is because I knew that, you know, Russia was ripe for a change. We needed a new retail model. The way retail finance was provided, not just in Russia but the world over, was pretty rubbish, to be honest with you. I like the idea of D2C, direct consumer disruption. I like the idea of a branchless model, high growth, focus on execution, but high risk as well, because it was a startup red in tooth and claw. We had a bit of a white knuckle ride many times, but it looked very appealing. I wanted to go and build something that had impact. I'll just add to that, maybe I'm by background, I came from punk in the 70s in the UK through goth in India, and I'm a bit of a nonconformist, so this kind of fit very well with who I am, to be honest with you.
So you're drawing a direct line from punk and goth and indie to
why not? It's punk banking, whatever that means.
Banking. I love it. I love it. Now you spent a long time at Tinkoff. You were there from you weren't the founder, but you were one of the early employees. You were there for in total a decade and a half or so at Tinkoff. Talk us through that journey, having been at a very large company, Visa. What was it like to be in that startup environment the first few years, 07, 08, 09? And obviously the world's, you know, into the financial world is going to hell in a handbasket for a couple of those years. What was it like to build a consumer credit focused new age bank in that kind of market environment, did you have, I'm sure you must have had thoughts at the time, you or your family, like, what am I doing?
I never had thoughts, what am I doing?
Okay.
I was, once I'd taken the plunge, and I took the plunge quickly, I was in it 100%, 110%, and always was, unfortunately, till circumstances changed in Russia last year, which meant that I had to crash out of Russia. Otherwise, I would have stayed with Tinkoff. It is an amazing story and remains so. So, basically, Visa's, it's an American corporation for sure. But I was working in the Samir part of it, was real frontier territory, as you can imagine, especially back in what is it, nearly 20 years ago now. I was very fortunate enough to have the opportunity to go out to Moscow to open the Moscow office for Visa there. And that was almost like a startup within the Visa family and within, obviously, leveraging off the Visa infrastructure. But there was a certain startup feel to it anyway. But obviously nothing could prepare you, sorry, for the experience of a startup in Russia in credit cards in 2007 with a high octane entrepreneur. So it was a real learning curve. It was a baptism of fire. And in the beginning, I thought I'd be spending a lot of time on distribution, obviously managing the team, helping build the team, putting the nuts and bolts of the business together, working on the product side, ramping up. Which was all true, but everything blew up on the funding side. So we were a wholesale funded credit card monoline, and there was no wholesale funding. So I spent most of the first couple of years running around the world trying to find equity, any funding that we could find to take us to break even, which we managed to do by hook or by crook. We got to break even, you wouldn't believe, it was October, November, 2008, just as the crisis really hit in Russia. So we broke even and stayed profitable ever since. So there wasn't a single year when we were not profitable, which is also a very important point about Tinkoff, which I suspect we'll come to later. So it was, a real steep learning curve in terms of funding, everything on the capital structure side of the business, which I never really thought about before. I was a bit kind of rose-tinted glasses when I went into this, assuming that funding was going to be there. But also having to pivot, be flexible, being entrepreneurial, very risk-taking, very high growth when we were able to grow quickly, which was basically dependent on funding. Also being extremely flexible, adaptive, and analytical at the same time, which sometimes I think it's quite difficult to meld all of these things I've just mentioned in one sentence. Trips off the tongue nicely, but to do it in business is actually quite difficult, especially in a highly regulated bank. But it was a very interesting ride, and we made it, and then went on to flourish.
Now, you said you were profitable from very early, and there are some examples of profitable fintechs. I mean, I'm leaving Visas and MasterCards aside but new companies, there are some, but they tend to be the exception. Most of the times it's the debate about, oh, it's in 3 years or in 5 years, or it'll happen. And what made you guys at Tinkoff profitable so early, so fast? Was it just, as simple as, a lot of money gets made in banking through loans, and consumer loans are particularly remunerative when they get paid back? And is it just that you picked the right asset class, or what made you so profitable? And what makes other fintechs, struggle?
Sure. So I think fundamentally the answer is that we were entrepreneurial. Yeah. So we set out to build not just a great customer experience, not just literally world-class customer service level, but also to build a profitable business. We were there to build a profitable business because it's a bank, and banks have to be capital generative. That was accentuated or exacerbated to a certain extent by the fact that we were in Russia, where there was always a dearth of capital. So it's not like, picking a country, India, where private equity VC money is just being thrown at fintechs, and it's still being thrown at them to a certain extent. but especially over the last 10 years, you know, it's been a bonanza. In Russia, nobody threw any money at anybody. There was no government.
Yeah.
So it was a matter of life or death. It was an existential question to get to break even and become self-sustaining as quickly as possible. If you didn't, you died. And most of the startups in Russia that we saw in fintech died. In fact, just about all of them, to be honest with you. So there was a dearth of capital. We had a strong emphasis on achieving profitability and maintaining strong profitability. We chose the right asset class, not just because it's a high margin asset class in a very uncompetitive market at that time, 16 years ago, but also because we knew that we could have very strong execution on a lending-led approach, as opposed to what you've seen recently in fintech over the last few years, which is a liabilities-led approach, where you launch a transactional product or a current account or a payments product or whatever it might be. Sometimes people make it, as you say, especially if it's payments on the merchant side, then there is margin. But when it's payments on the consumer side, and consumers don't like to pay for transactional services, you're going to lose money. So if you don't have focus on profitability, disciplined approach to achieving break-even and scaling up your business profitably thereafter, then you're going to basically scale your losses. If you think you're going to have eternal funding and the markets are going to be great forever, which we know they're not because it's a cyclical thing, unfortunately, and you're always going to have people wanting to fund your business, then it kind of almost lulls you, in my view, into a false sense of security. And you build your model around the fact that there's always going to be funding available. So you scale up these big losses by building a big transactional business without having the lending piece or brokerage piece or whatever the monetization piece is in place. And then you hit the rocks.
Now, building this new neobank, what was some of the biggest challenges in starting something from like the classic 0 to 1 blank piece of paper? What was the tough? I'm sure everything was difficult, but what were the more challenging bits of it? Was it getting the technology in place? Was it getting the right products in place, the right team or workflows, or what? I mean, if you were telling someone, or if you were advising someone, a team, whether it's here in the UAE or in India, Southeast Asia, guys, this is how you should build a new age bank, what would you say? That this is the checklist. These are some of these are the big things that you're just not going to see coming if you've not built one of these before.
I mean, it depends on the market. It depends on the particular situation, the individual circumstances. So obviously every situation is different. Every instance is different. But maybe there's some common challenges. I think the first is if you build a viral product, then at some point you're going to need to switch on the monetization. Yeah? And so you have to think about that as you're building the viral product. And then the reason for that is because CAC, your cost of acquisition, goes up no matter what you do. Because the first 100,000 trendsetters, early adopters, whatever you want to call them, will come to you because there's this nice new shiny thing come along, which has got a great strong product, great value, nice interface, great onboarding, whatever. But then getting the next 500,000 customers is a bit more difficult, and then getting the next 3 million and the next 30 million is bloody hard. And it costs more and more money as you go along. So managing the funnel, the whole funnel, end to end, yeah, not just how many leads you can shove in at the top of the funnel, but the whole process going all the way down in a joined up way, analytically, keep you on top of it, because every time, it changes over time. It's shifting sands all the time. Every time you open a new channel or a new partner or whatever it might be, you've got a new funnel, new products bring new funnels, etc. It's something you really have to keep on top of. And from what I can see, it's not something that many players successfully keep on top of all the time. You have to be rigorous. That's probably one of the first parts of the answer. The other one is regulation, obviously. Regulation is a blocker to doing digital banking, because regulation evolved around branch-based traditional banking. And so very often, again, depending on the market, but very often there are things which look like barriers to building a digital franchise, a digital model. So in Russia, for example, you had physical KYC requirements. So you had to have a physical meeting, a passport check, a wet ink signature on a bit of paper. But you have to remember that that applies to everybody. It's not just you. And then work out innovative solutions to that. So what we did in Russia was created what we call a platform for reps, field reps. These were not couriers, they were field reps, very smartly presented young people, well educated, who went out, and they were not just our delivery force, the cards, but they also did KYC, they did verification, they did cross-sell, customer service, helping people upload the app if they hadn't done it already, etc. And it turned out to be a huge success, and actually one of our competitive moats as a result. So that's how you should think about regulation, not as an annoyance, but as something that actually helps you if you can crack it. But also you have to lobby the regulator to move things along as well. And how you scale profitably. So tech is not an issue. Tech's an enabler. You can do it better, you can do it maybe slightly worse, but it's not, you shouldn't be too focused on tech. I'm rather pragmatic when it comes to this question, to be honest with you. So how do you scale profitably, including your technology, including how you build up your workforce, your team, how you focus on your numbers, and make sure you're not scaling losses, because you're a bank. Banks can't lose money, not long term.
Now, as you were building Tinkoff, how much of the learnings, so obviously the origin story comes from Oleg being in the US and experiencing US consumer credit. How much of that allowed the founding team to put daylight between yourselves and what was already in the market? And how quickly did you find actually what we need to build here in Russia, that stuff in the US doesn't work here? Was it quite quickly you're like, okay, now I need to change this, tailor this, whatever? I mean, how much did that kind of original, I don't want to say it's a Capital One thing, but just that Capital One inspiration type, how much do you have to modify it, make it sort of localize it? And
sure. I mean, so there's a short answer and a slightly longer answer. So short answer is you can never cut and paste. You can never copy. I mean, you can be inspired by, we were inspired by someone. And I'll explain how in a second. But there's no such thing as kind of plugging in a model from another market and plugging it into a totally different, because the regulations different, competitive environments different, consumers different, everything's different, the team's different. And so that just doesn't work. So what inspired us from Capital One? The direct consumer play, initially using direct mail, focus on credit cards as a high margin, high contact, and let's say manageable product once it's been issued, unlike a cash loan, for example, with a deeply analytical approach, with a test and learn approach, a low and grow approach, so all NPV based modeling. So all these things I've just mentioned are things which inspired us. We borrowed ideologically and used in our business, but very quickly we became something different. We weren't a mini Capital One forever in Russia, because that just it's not possible, as I said. So we took some instruments or some approaches by talking to people from Capital One on a regular basis, and then implemented it in a very different way, which was online, using digital channels for digital customer acquisition, not just for servicing. We embedded NPV modeling, so horizontal economics rather than siloed kind of quarterly P&L approach. Probably, I would argue, in a way that maybe was even deeper than Capital One. Hope that's not too much of a broad statement, because it informed everything that we did. We were extremely disciplined, extremely analytical in this approach. But then over time, we were influenced by events, global financial crisis, the Russian crisis, 2014, 2015. The fact that our funding model fell apart in the global financial crisis. We couldn't find wholesale funding to fund ourselves through local and international bonds. We had to basically work out how to take deposits as an online bank in Russia with no brand and no confidence from customers because they just didn't know who we were. Then we
And how
expanded.
quickly did you switch to deposit gathering? So the funding markets dry up, what, in 08, and you launch in 7, or?
Yeah, so 2009, we were already testing deposits. So as I said, we were fortunate enough to have a full banking license from day one, but we just didn't use the liabilities side of it. But we worked out how to take deposits online, worked out the KYC piece that I mentioned before. It was very expensive deposits in the beginning, if I recall, 22% in rubles.
Wow.
Yeah, but
what were you lending at?
we were lending in those days at over 50%.
Right. Right. That's 50% per annum or 50% per
per annum. On a very low ticket. I mean, that was a low and growth. So
what kind of ticket sizes were they? What were the consumers? What were the clients doing with it?
So in the beginning, it was mainly borrowers with a revolving credit line who took a credit card either for a one-time transaction. So, the fridge packed up, they wanted a new fridge. Maybe they're getting married, doing up a flat, all of those kind of traditional consumer lending purposes. Or they took it because they wanted a revolving credit line that they could use to transact on a regular basis, but it was mainly the revolvers. And it was basically around $300-500 initial credit line. Sometimes we'd give as low as 100 and then grow them through another Capital One term clipping credit line increase program. So you see how they perform, the fraud goes out your portfolio, and then you give them a limit increase. But over time, obviously, it turned into a very different beast. We went into the mass affluent market. We got a much more transactional customer base, obviously much lower margin loans, but with much lower risk. And built out of that a very big transactional business in Russia. So basically, we became one of the biggest transactional banks in terms of active customers using cards, payments. So that was our routine.
As you grew, maybe from the start, what was the role technology plays in this business? Obviously, you had a different business model. It was direct to consumer. It was entrepreneurial, but where does the tech in what became called later on, maybe in the mid-2010s, Fintech, where did the tech bit come in? But do you have a lot of sort of technology savvy people in the leadership team from the start? I'm not saying you're not technology savvy, but but I'm just saying, you came from Visa with a lot of kind of basically propeller heads and rocket scientists in that leadership team, or working with you.
Yeah, so they were all eggheads for sure. I'm maybe less eggheady, but so technology was baked into what we did from day one. We were not an online player from day one, but we became an online player very quickly. Yeah? So everything was moved to online customer acquisition channels, online servicing, online cross-sell. Everything became digital, but basically by about 2010. So to do that, make that transition, we had to have a certain number of building blocks, basic building blocks, and this comes from who. So we had to have our own engineering teams, and Russia is very fortunate in having some of the best engineering talent in the world, and there's lots of it. So we started with off-the-shelf systems, but then we basically re-engineered them ourselves, developed them ourselves, and then built our own bits to replace what we bought off the shelf over time. So the platform was almost 100% our own by the time we got to about 2015, 16. We knew we tend to build it ourselves in-house. The data collection, management, analytics piece of it was obviously what drove our business from day one. So it's the mathematical approach. Credit card lending is mathematics if you're doing it right. And so it's not just scoring, the NPV modeling, portfolio management. It's all the data that you take in order to do all of that. And that required a very strong technological approach, a very, basically leading data warehouse approach. How you use that data and propagated that data as deep down as you could and gave access basically to all the analysts in the business, of whom there were hundreds by that point, so they could play around and experiment and conduct tests at a low level in the organization. So everything was tech driven, but it's not tech for the sake of tech. Yeah, it's for the sake of data, so that we could drive our business forward based on the data that we collected, on the tests that we were doing, on customer behavior, on portfolios, and the data we're getting, big data that used to be called, that we were getting externally. So in order to do that, you had to have a tech-enabled organization.
And just walk us through the timelines. When you launch in, I can't remember, is it 07, 08? It's a mail order. It's not a mail order, but it's sort of mail-based, direct to consumer.
Yep.
And then when do you pivot to, when does it go onto the, I guess, the mobile, the smartphone? When does that moment happen?
So this is before smartphone or mobile banking, as it used to be called again. So we were a direct mail, direct to consumer credit card company with no branches. It was wholesale funded. It was very simple. We borrowed from the markets, from the credit card business in Russia, lent to consumers across Russia, but mainly in the regions. That was the model.
Right.
Then the global financial crisis happens, wholesale funding.
And how did you, sorry to interrupt, Oliver, and how did you do the, how do you do the lending? And it's a dumb question, but if you're direct to consumer before the internet, before you're using the internet, but how are you collecting information, doing the underwriting? How did all that basic plumbing stuff work?
We're going back into ancient history here, but you asked the question, so I'll answer it. So basically, in Russia, there was a credit bureau, which had 3 credit bureaus, large ones, which were mandatory for all banks to use. They came on stream in 2006. Negative data, positive data, you could see everything about the borrower. It wasn't a particularly full credit bureau because it only just started, but it filled up very quickly. So the Tinkoff was timed to coincide with this, which is very important. We collected partner data from all over the place with all sorts of marketing activities of our own, take ones, leafleting, partnering with partners that had some kind of mailing databases, and they would do a mailing on our behalf, and it was kind of like a lead generation program. So that there were all sorts of ways of collecting data. So the idea was to collect data to do targeted marketing so that you could optimize your response rate, reduce your wastage, basically, so we didn't get a response rate. So that was a very important part of managing the customer funnel, the acquisition funnel. All of the data we could find to drive underwriting and make sure that we're scoring properly, portfolio management. So everything was data driven from day one. So that just moved very, very quickly onto online. In 2010, 2011, we were fully online for customer acquisition for credit cards, deposits, debit cards, and this whole kind of organizational design that and hard skills that we had lent itself very well to moving online. So we opened online finance in Russia. Nobody did it before us. And that was really where it just went into supercharged growth. So we tapped into seams of growth which hadn't previously existed, and managed to basically triple our customer acquisition each year for many years up until now.
And that was like 2010, you said you began to use. And what was it? You used the mobile phone, you had a Tinkoff app, or how?
No, it's web landing pages. It's web landing pages. So we had a really basic mobile servicing app that we didn't promote at all. So at that point, it was digital acquisition onto a landing page on the web.
And most people would be accessing that web landing page through a phone or a desktop?
Mainly desktops at the time, but then obviously the mobile web increasingly over time. So the mobile app really only came in as an acquisition tool and obviously a servicing tool and a cross-sell tool, basically what financial and lifestyle super app. That really happened about 2014.
Okay, so 2010 is web-based, desktop-based. 2014 is the kind of time you shift to an app-based mobile phone. And what's happening in the broader ecosystem at the time? Were you one of the first to do you said online, but what about the apps? Were there others doing it before you in Russia? And is there and again, just showing my ignorance here, but this super app idea, which obviously, some people would say comes out of China and then has become huge in China and Kazakhstan with the player we both know, and to some extent in Southeast Asia, but has been, like here in Dubai. I mean, people talk about super apps, but do we need a super app in the UAE? I don't know. Let's park that question. But in Russia, were you was Russia a suitable market for super apps? Was that the plan? Like you become a super app too? And
so, again,
what is
a very big question there. So where do I start? I'll start. So there's super apps, which were driven by one core service. Yeah. So in China, for example, there was Alipay or WeChat. One was Messenger, the other was payments for e-commerce and Alibaba. In Indonesia, for example, Gojek, Grab, and so it was taxi, ride-hailing, e-commerce, gaming. There's all sorts of different super apps that rose out of a particular core service, which was their main locomotive. And then they added financial services as a bolt-on. So first it was payments, then a bit of lending, kind of BNPL type lending, and then more and more financial services as time went by. Some more successfully than others, but that was typically how the super apps arose in Asia. In other markets in the world, super apps as a per se just don't exist, because so you have single-use mobile apps as opposed to everything being dumped into one app. I use the word dumped deliberately. You have in Russia a very different. Actually, if we're taking Kaspi and Kazakhstan as well, a very different evolutionary path. So Russia and Kazakhstan were the only places in the world, to my knowledge, where a super app play arose out of a financial platform. So Tinkoff was the first to build a super app by adding more and more services into the app, which were initially financial services and then going beyond finance. Kaspi had its own evolutionary path, which was basically by building a marketplace, and payments was a glue for that, and consumer lending. The Sberbank tried to build a super app, which basically covered all sorts of different verticals, including taxi, food delivery, e-commerce, you name it, they were doing it. But they were all built out of a financial platform, so it's a very different development path in Russia and Kazakhstan, which was quite interesting. But before we move on, I have to answer your question in full. So basically, Tinkoff didn't say, okay, we've got a nice consumer lending business through credit cards. We've got our funding cracked because we worked out to take deposits, and that became very scalable. We've got a nice technology stack with our own engineering pool. Why don't we do a super app? It wasn't like that at all. It was happened in incremental stages over a long period of time. And we didn't set out to build a super app in 2007 for sure, because there weren't any. Nobody had thought of it at that time. So what did we do? In 2013, 2014, we realized that we had a model that was scalable, a platform that could do lots of things, acquisition channels that we were underutilizing. So we had huge digital capacity in terms of our customer acquisition channels. We were only selling credit cards and deposits, that was it. And a few debit cards, which are bolt-ons to deposits. So we thought, okay, let's try and see if we can sell other financial services. So we built an online insurer. We built a point-of-sale lending business, which you would now probably call BNPL. We built a personal loan product. We started going to payments on the merchant side and the consumer side. We decoupled our debit card from the deposit and made a proper viral, basically current account / consumer payments product with cashback and loyalty, really, really rich, and it genuinely went viral. And then as we started building up this customer base through this viral product called Tinkoff Black, which is a current account payments product, we started building up a customer base, which meant we could reduce our cost of acquisition and cross-sell, because we'd already brought them into our customer base, other products and services. We built an SME transactional business. We built a brokerage business. So if you think inside Tinkoff, you had a Revolut, you had a Stripe, you had a Robinhood, and on you go through the list. So we built out this full service financial service provider in the cloud. with multiple profitable, I emphasize profitable product lines, and then decided that we would go beyond that. And we went into some verticals which we decided to build ourselves. So we built an online travel agent, we built a loyalty platform, we built a content provider, and various other bits and bobs. And then the other stuff that we didn't want to do or couldn't do, because it's too far beyond our core competencies, like taxi, e-commerce, food delivery, health, education, whatever, all online, obviously. We took those third-party services and put them into our super app. That's when it started winning, became a super app. And the more services we had, the more this drove frequency of visit. So DAO as a percentage of MAU, sticky factor, and dwell time in the app. And the reason why we did that was not so we could say, you know, we got this amazing MAU and DAO in our super app, what a great super app. Because we wanted our customers to be in our app as often as possible, so we could cross-sell them more financial services, which were where we made money. And that business case, if you like, was proven. So it actually worked, which I think was an amazing result. And it just kind of, it's almost like a self-fueling thing. So the more customers you get, the more network effect you have, and the more customers you get, continuing in Tinkoff today.
So 2007-8, you start as a mail-based credit card company. 2010, you go desktop. 2014, apps. Other, like a family of financial, like a financial super app is when again, 2016 or when? Yeah,
so financial, I mean, let's not call it financial super app. It was an app with all of the financial services in it for retail. Yeah, that wasn't a super app.
Sure, that is when?
Full service offering. So when it became a super app with third-party, non-financial verticals, and our non-financial verticals, lifestyle, as we called it, being added, that was around 2017. That was really when supercharged.
2017.
Yeah,
2017.
around that.
Right. And then you went broad-based on financial services around 14, 15?
14, 15, yeah.
14, right. And so 2017, you get non-financial, you become a super app. And then what kind of delta or noticeable change, material change in your financial business, your core business, do you see from graduating to super app status? Was it one of those things that are kind of nice to discuss on a podcast or in a Harvard Business School review, or did you see, whoa, we're actually making a lot more money in our core business?
So I think you have to break this down again into chunks. I'm sorry that I like doing this.
No, I like your chunks.
I'm a very simple person, and I'll have to, in order to answer.
Chunks are good.
Break it down simple bite-sized chunks.
Yeah.
So the first stage of Tinkoff existence was primarily as a smart consumer finance player. Then we built, using, well, let's say, redeploying the profit we were making from the consumer finance business, we built a transactional business. And that brought in literally millions and then tens of millions of new customers, transactional current account customers with debit cards and payments. And then that enabled us to do the third phase, which was build new product lines on the top of that transactional customer base. So we offered them SME services, we offered them brokerage services, we offered them new lending products, secured and unsecured payments, insurance, you name it, and monetize those customers. And then in order to accelerate the flywheel effect, so you've got this growth curve, which was steep anyway, but just going almost vertical, and still is, you added other services, third party and proprietary, beyond finance, in order to get them in your app, so increase the face time as much as possible to sell them even more financial services. And so that meant that we were moving away from 100% credit revenue to 50% credit revenue and 50% non-credit revenue, which is a very important diversification. And you were getting more and more customers coming in through the network effect and virality, to whom you were able to sell more and more products and services through which you monetize them with low CAC, because the more viral it is, the lower you paid for the customer. So it's like virtuous circle that we managed to get into.
Last question. Why did, and it's different in every country, but it worked in Kazakhstan, seemingly. You'll argue it's worked in Russia. it's obviously worked in China, the super app concept where financial services, non-financial services, it's not really been up to now. Maybe we're watching this in 5 years' time, and so that's a stupid thing to say, Ronald, but up to now, hasn't worked in Western Europe, in the UK and the US and the kind of quote unquote what used to be called the developed world. And even in India, has it really worked? Jury's out. Not so far, maybe. What's the kind of, what's in the water? And I know every country is different, but why did it work in certain countries? And if you were building something now, and I don't want you to breach any NDAs and whatever, but if you were, and I know you're not just sitting here in Dubai on the beach, so you're busy building, advising, working on things. I don't know how much you can share with the audience, but what would you be building now? What makes sense?
So a super app is not an end in itself. Yeah, it's not a destination. It's just a means to an end, which is to speed up the flywheel, so you've got more and more customers coming in to whom you can sell more and more financial services. I'm a financial services person, and that's where I know how to make money, and that's where Tinkoff makes money, and that's where I believe that the projects which I have been involved since Tinkoff will also end up. So super app is just a means to an end. It's not an end in itself. I have been doing for the last year or so a project in Southeast Asia, and which I stepped out of in February, but the team is continuing and they're doing an absolutely fantastic job. It's a real A team that are building a fintech in the Philippines. This is public information, and they're starting with lending, consumer lending through digital channels with a branchless model. It's some fantastic Filipino fintech people and ex-Tinkoff people who have melded to basically create this high performance, high growth, early stage consumer lending company, of which I'm very, very proud. I think they're doing a fantastic job. And once they've got the revenue coming in, hopefully they'll get to break even fairly soon. Then they'll launch the transactional piece. So it probably sounds a little bit familiar with the model, but it's tried and tested in the Philippines. That will definitely work, and probably other places in Southeast Asia. But times change, technology changes, consumers change, markets are different, and maybe they won't need to create a super app or whatever you want to call it, a high frequency app. Maybe they'll do something else. And to be honest with you, one of the problems with super apps is that they get very cluttered. There's just lots in it. It's difficult to understand, navigate, and even if you're a customer with lots of time on your hands, you still don't have time to go through everything and understand it, remember it when it's needed, etc. So what's coming now is the next version, if you like, or next generation of financially driven super apps, which is AI driven, where based on your behavioral profile, your transactional profile, your social demographic profile, you can build a very strong recommendation engine which understands what people like you use or want or consume, or where you travel to, or whatever it might be, and push the right content to you at the right time. So that it takes hygiene stuff, the boring transactions, transfer to your mum, utility bills, credit card payment, whatever it is, into the background and automates it. But the stuff that gives you endorphins, such as travel, kids, entertainment, concerts, whatever it might be, loyalty, it brings into the foreground and pushes the right stuff to you, so you don't have to navigate through 150 pages of stuff, like you get in many super apps. So probably they won't be building super apps in the Philippines in a few years' time. When they've cracked it, they'll be building something else, maybe even goggles, who knows. But it's not that super apps is what everybody have to build. There's all sorts of ways of getting to the alchemistic end.
Gosh, I've got so many more things I'd love to chat to you about, but I'm conscious we've hit the hour mark of our conversation, and that's kind of what we talked about doing. And I'm going to pull it to a close. Thank you so much for joining us today. Hope the audience are listening to this enjoyed your experiences. Tinkoff obviously was an amazing story in the 2010s in building a new type of bank in Russia, and we look forward to your next adventures, Oliver.
Thank you very much indeed. It's been a real pleasure. Good to see you, Ronnie.
Thank you.